As we kick off a holiday-shortened week, the major U.S. stock averages are trading higher. The Dow, Nasdaq, and S&P 500 are about 0.4% higher as we are heading into the noon hour. So joining me now is Peter Cardillo of First Standard Financial. Peter, great to have you here today.
Be back.
Well, we are seeing the stock averages higher as we return from the weekend. Now, Good Friday marks a national holiday, so the markets will be closed. But in today's session, we're seeing energy higher. So given that oil prices are higher, we're seeing the energy sector up. But it is also earnings season. So what's your main focus?
Yeah, actually, the market is shrugging off the heightened geopolitical situation right now, and of course, with the Secretary of State going to meet Mr. Putin. I'm surprised that the market isn't reacting a little bit on the negative side, but I think the reason for that is, as you pointed out, we have higher oil prices. Oil prices are up. There has been a shutdown in one of the oil fields in Libya, but basically I think the sentiment in the market is changing. That is the oil market. I think the oil market is beginning to realize that the rebalancing is taking place and that OPEC means business this time. They're not going to undo their last production cuts, which means that if we should begin to see less inventory buildups, which that is also quite noticeable. That probably means higher oil prices in this quarter, perhaps going as high as $60. So that's a supporting factor for the market.
And speaking of quarter, we begin earnings season this week. Big banks will report earnings, and expectations are high for the results. But overall, what do you expect to see in this season?
Well, in general, I think the earnings season will be somewhat like we saw last time around. I don't think there'll be major surprises either on the upside or the downside. Of course, the real focus on earnings will be whether or not we'll see good guidance. And of course, with the dollar in the first quarter having been a bit weaker than we previously saw in the fourth and the strength of the fourth and third quarter of the U.S. currency, that should help multinational corporations.
And speaking of expectations, there are expectations of slower Fed rate hikes, but given the rate differentials, what we expect from the ECB, what is your latest response to both the Fed and ECB?
I'm really not sure whether or not, we're not in for 3 rate hikes or 4 rate hikes or perhaps no rate hikes. I think the fact that the Fed is quite determined to reduce its balance sheet is a toss-up. It could go either way. The Fed needs to do this very diligently, precisely. Otherwise, we could see rate hikes move even higher than we previously had expected. On the other hand, if the economy should slow, and Mr. Trump doesn't make it in time to stimulate the economy with tax reforms or with infrastructure spending, then obviously the Fed might not even enact to reduce his balance sheet. So I think it's a toss-up. So it's a little too early to call, and as I said, it has to be done precisely, and the Fed needs to do it without upsetting the markets.
Okay, Peter, well, thank you so much for joining me on this Monday, and have a great holiday weekend.
Thank you. You too.